What's up, everybody? Super excited for this one as we, as you know, like to be upfront and have all of the information out to you guys as buyers. Don't worry, I'm not going to sit here and tell you that you don't need 20% down to buy a home. We are going to talk today all about those closing costs, what to look for to make sure you are getting the best possible deal, but also understand the value that a dialed in loan estimate can give you as a buyer. So stay tuned. What's up, guys? Jeremy Kane with eXp Realty. Thank you so much for tuning in. Whether you're on Instagram, Facebook, or YouTube, thank you so much for tuning in. We don't take it lightly. Throw me a comment if you have any questions or you are looking to purchase a home. I do put general content out, but I always suggest that we really dial in your specific need when purchasing a home. So like, comment, subscribe, do all the things, but let's get right into it. So first and foremost, when we are purchasing a home, we have to have financing to purchase said home. And with the financing, obviously, real estate agents' commissions are under investigation lately, especially on the buyer side. The lender does absolutely get paid when you are getting a loan. And so that is the first part of the closing costs. There will be some loan estimate fees or some fees that come in from the lender side that you need to be aware of. There's taxes and insurance and all the things. So let's first and foremost break down what it looks like when you get an offer accepted on a home. So you put an offer in, typically you've had a conversation with a lender. If you're getting a loan, to, maybe you give them your tax documents, they've done some research on your background, they've looked at your debt and your income, and they've decided you are pre-approved for a home at this value. Now comes a time where you actually find a home within that value, and then the numbers get a little more real, right? You're pre-approved for up to 500, you go under contract at 415, and then they will first send out a fee worksheet. We'll start talking about all the things that go into the loan. We'll start talking about insurance and all of that. So you'll have a fee worksheet. What a lot of people are doing right now, because of the higher interest rates and the higher costs, is, clicking on a button and all of a sudden you're, getting another loan estimate from another lender because they said that the interest rate was lower. Buyer beware at this point. Make sure that you are dialed in to exactly what all of the costs will be. I always tell my clients to focus first on the monthly payment and what goes into that monthly payment, as a lot of these things are estimates, but then taking a look at, what the cash to close is, right? Because lenders all pretty much have kind of the same rates. There's all kinds of different programs, FHA, conventional VA, that you might qualify for. And the lender's job is to put you into the best loan product possible that you decide, right? So they're going to give you options. Oftentimes you're going to go under contract. We're going to plan the inspection, and all that real estate stuff is set aside for this conversation. And we're going to start talking about, okay, this is the rate. And they're going to quote you an initial rate with initial closing costs. And typically they'll quote you another rate with a little less closing costs. And so you can kind of see how it does. It all goes into the pricing, and all of the closing costs are determined based on that interest rate. And typically, there's par rate, below par rate, based on more closing costs. And then now, especially, you can buy down rates. And so lenders are doing all kinds of different things with credits and so on. However, all lenders are getting paid. So that initial, payment usually comes out of the closing costs with the interest rate. And so as we're looking at this, you have to step back and look at the fees and what's going on. Typically on the fee worksheet or the loan estimate, I'll tell you the difference in a second, you have an estimated title cost, right? You have estimated, the lender fees shouldn't be estimated, because if the lender's giving them to you, they should know what they are, especially if you have the purchase price and all that dialed in, right? And we're under contract, so that's where we're at. And then you have all the escrows, taxes, insurance, which are estimates, especially in Denver right now. In Colorado, since we had the property tax adjustment, we talked a lot about that last spring when those values came out, the taxable value of your home, and people were freaking out. My home's not worth that much, when really it was. So your assessment came out, and then they should have sent you in December the amount that your taxes were actually going to go up. However, right around that time, our fearless governor decided to offer I think a $300 credit or something crazy. So now none of the 2023 taxes are set and they haven't been identified, and here we are in 2024. Taxes are paid in arrears here in Colorado, so your 2023 tax bill will be coming due in February. All the counties should be releasing those in the next couple days so that you understand how much you're actually going to have to pay. Well, in your mortgage payment, you have been paying escrows since the day you took the mortgage out. They set up an escrow account and you're paying escrows in. And so if you're in home ownership, when those tax bills come out, you will likely get something from the mortgage company that's servicing your loan that says, hey, we're short on the escrows because taxes are going up. At the same time, if it's time that when your insurance premium is either created at closing or when it is updated, when the premium comes due, you will likely see an increase in that as well. But as a home buyer, this year especially, we don't know what the taxes are going to look like. So that is a complete estimate. Because, in some cases they went up 40%, close to 50%. So that's going to be a huge increase. And if, on that loan estimate or your fee sheet, your lender's using an old tax, assessment or valuation, that's going to be the first thing that's going to give you some sticker shock when your payment's going up. And then the insurance premiums are starting to go up. Now, insurance premiums typically now we're seeing 1% hail deductible, 2% hail deductible. You can play with your premium a little bit there, but I would not risk it in Colorado. If they're offering hail insurance on your roof, you should probably get it, because I have a crazy story, but this is health insurance related, but literally the first 7 days I was not insured because I was right in between jobs. I actually got an ear infection and I never got sick, but that time I did. I was at Lake Powell and I thought my ear was going to explode when we were coming back over the passes. Had to go in and have a non-insurance visit to the doctor, which turns out it wasn't that much. But anyways, my point is that when you're not insured or you're, at a higher risk, it's likely that something like that might happen. So definitely pay attention to your deductibles when your insurance comes up. But back to the loan estimate. Your loan estimate is an official document that is regulated. The lender fees can have a variance of 0%, so they cannot change, which makes sense because the lender's providing the document. They should know what their fees are. The next is title. You can have a 10% variance in the title estimate from the estimate to the final settlement statement that comes out when we close the home. But the big variance is going to come in insurance and taxes, especially right now, so you need to really dial that in and make sure you're looking at the taxes and insurance and obviously HOA premiums, because those are also going up if you watched my video last week. And those are numbers that we need to make sure we pay special attention to, because what a lot of buyers are doing is they're saying, okay, this lender gave me this fee sheet, this lender gave me this fee sheet, and put them next to each other. If we're not looking at the details and what numbers they're using, certainly the loan fees, the lender charges, the underwriting fees, all of that is absolutely something that you can pay attention to and compare apples to apples. However, there's no control of the taxes and insurance. Insurance, obviously, you have to raise your hand and provide the estimate from your chosen insurance provider. But taxes especially, no one knows, right? And so some lenders have gotten ahead of the game, which I think is the right move, and said, okay, the taxes are going to go up. This is kind of a rough estimate, because they're giving you an accurate portrayal of what your payment is. And with these higher interest rates, these mortgage payments are a lot higher than, maybe we saw a few years ago for the same price, because the interest rates are higher. So that's going to be a cost. But now all of a sudden the taxes are higher and the insurance is higher. And here's the deal. The lender has no control over that. However, if you're dealing with somebody who's looking at your finances and providing you a loan, and they're giving you a fee sheet to win the deal based on 2019 or 2020 or 21 taxes, they are going to be very different in 2023. I understand we're in 2024 currently, but this is something to pay special attention to, because that'll have a drastic impact on your monthly payment. So a lot of times we're looking at it, we're stressed out, we're worried about the inspection, we're doing all the things, and you look at the bottom line, you say, okay, well, this is my monthly payment. Some people stop there and say, we want the cheapest one, period. Hopefully that's not the case. Hopefully all the lenders that you're talking to will say, okay, well, here's your monthly payment, but here's your closing costs, right? Because that's a balancing act. You can mess with your interest rate with cash to close and all of that, bring $20,000 to the table on a $500,000 house, and it's going to impact your payment by $300-400 if you want to apply that money towards a buy down, right? And so you have to really know what's going on there, but let's really focus on the taxes and insurance and make sure that those numbers are dialed in, because those numbers are not at the control of the lender, not at the control of the agent, not at the control of anyone. And so if you're saying, I like this loan estimate more because it has a lower rate and a lower payment, and the closing costs, I have that in the bank, so I'm ready to go, this one may be the more accurate one. And essentially, if I have someone deal with my finances, I want the one that's going to be the most accurate, because I know what to expect. Because there will come a time where this one here is not as accurate, and then you're moving into a home, the taxes skyrocket the day you move in or next month or whatever, and here we are into a home where now we're paying $300, $400, $500, $600 more per month because the taxes escalated that quickly, right? This used to not be a major thing. However, when we did see it, we would see like a senior exemption, right? The person you were purchasing the home from had a senior exemption, so their taxes were lower, right? And then no one noticed that, and we just went ahead with escrows and all of that, and that comes there. So what do you do, right? As a buyer, you're under a lot of stress. Certainly this lender is going to tell you one thing, this is what it is. This lender is going to tell you, that was higher, whatever. Raise your hand and ask your real estate agent, right? Say, hey, I understand you're not a lender, but can you look at these two things and see if they're the same? I see these two numbers are the same. I see the appraisal fees the same. I see this, but then there's some variance down here, right? And hopefully that agent has the competence enough to look at it and understand what's going on. And here's the deal. I have a ton of lending partners. I love every single lending partner that I would send you to and refer to you. One thing that I require of those lenders especially is that they are putting our clients, in the best position possible. And sometimes being in the best position possible isn't the very cheapest everything, right? There's a lot of, lenders from out of state and on the internet doing clickbait. Next thing you know, there's a fee or there's a terrible experience to get there because, clearly if they're charging such a low fee for their loans, well, they probably can't employ, their salaried employees as well. So that's the first thing. Make sure that your experience is okay. It's a high stress, couple $1,000s, $15 a month, probably not a major deal to make sure that the deal gets closed. Because if the deal doesn't get to the table and your earnest money becomes at risk or whatever because of the lender, that's a bigger problem and a much higher expense, because then we lose the earnest money because we made that decision on the cheap lender. Now, sometimes lenders are getting beat, right? There is definitely, lenders are really cutting their fees and cutting everything so they can win the deal, because they know once they get you in, then, eventually they'll probably get you on a refinance and whatever. That's fine, but let's really look at it. Let's make sure the experience is right, make sure you're getting the full truth, but don't get duped by looking at the loan estimate and saying, okay, well, this person's charging me $150 for taxes and this person's charging me $350. This is better. That doesn't matter. That number is going to be what the number is. Unfortunately, the government doesn't allow us to dictate what the property tax is on your home. And, also look at the insurance, right? Because certainly you can lower the insurance premium you have on your home, right? And still have the minimum, required by the lender. However, if something happens, that could be a $10,000, $15,000, $20,000 difference in this standard policy over here. So really make sure that you're looking at all of these fees, especially those variable ones. Remember, the fee sheet is not regulated. That's just kind of an estimate. So first things first, when you get the fee sheet and you choose one based on that, look at the next one. The next thing I want you to be aware of is those fees on the loan estimate, because those are the ones that are regulated. Again, 0% variance in the lender fees, 10% variance in the title fees, and no maximum variance in the prepaids, which is taxes, insurance, and so on. So just wanted to point that out to you. I also want you to know that I work with the top-notch professionals only, and sometimes top-notch professionalism might cost you a little bit more, a quarter point here, a quarter point there. However, in the end, it'll be the best bet for you, because those people are going to be with you side by side the whole time. Quick, whoever, the other loan companies that you might find on the internet that's flashing the cheap interest rates up there might not necessarily be the one that gives you the best bang for your buck as you move forward. So be very cautious. The other thing is, a lot of people are offering free refinances. So just come with me. We'll give you a refinance. It doesn't matter. Make sure you look into what that free refinance looks like. Is it just the origination fee? Is it just the underwriting fee that they're going to waive? Because there are other costs that probably will come into play. And you just want to make sure that if that's the incentive you're going with, that it makes sense. Again, if you have any questions, you can always reach out to me as your agent to go through that. I obviously fully understand what's going on here. I can compare apples to apples and help you understand that. I am not a lender, but I can definitely, walk you through what's going on. I look at these things every day, make sure they're accurate. So I just wanted to bring that to you, as a lot of my lenders have been getting shopped and a lot of shady things are happening, and that's just not cool. So I partner with the best in the industry, and it's my 100% dedication to make sure you are taken care of, fully educated in the process, and there's no surprises, because surprises typically at the closing table aren't very good. So I hope you have a good night. Like, comment, subscribe. If you would like me to connect you with one of these lenders that I adore for getting us to the closing table and taking the excellent care of my clients, please reach out. As always, if you have questions on this, which you may, or you're referencing this down the road because you're looking at loan estimates and you're like, what's going on? Reach out. I'd be happy to have a conversation with you and help you out. We'll talk to you soon. Bye-bye.